Good morning, good evening, and good afternoon, everybody. Hope everybody's having a fantastic day today. It is Thursday. That means it is high probability short-term live with Mike Wade. I hope you're doing well. Hope you're having a great week. First up, we're going to talk about a quick market review. Liberation Day did not disappoint. Actually, it kind of did disappoint. It was kind of crazy, though. But tariffs are insane. Futures are down hard. Excuse me, Sniper's portfolio. We're still at the 91% win rate. Recent trades, we're going to talk about Nike. I wore this shirt in sadness, but we'll get a little bit more to that in just a little bit. And then we're going to talk about maybe a couple current trades that we have, maybe not really sure, a whole lot going on in the market. Then we're going to go through some of your stocks, some of your questions, everything like that. Mike, I'm sure they're probably tired of me rambling on. How you doing, sir?
I'm not tired, man. I'm invigorated. Look at that energy, man.
Yeah, man. Yeah, I got a Celsius right here, and we're ready to go, pumped up.
Yeah, that's how we should be. Yeah, it's crazy out here, man.
Jeez.
We got. God, there's so many opportunities right now. And it's hard to focus a little bit, but it isn't, there's opportunity everywhere, and it's not bullish opportunities. You're going to see here in a few minutes that the futures are down hard. We're going to talk tariffs a little bit just so you understand the magnitude of the tariffs, because it is nothing I've ever seen in my 25 years of life on the planet.
Yeah.
And so, Ryan, let's hop right in and take a look at what happened yesterday. Independence Day. The problem that Trump is trying to solve, and it is a problem, is that many countries in the U.S. charge really big tariffs, and the U.S. doesn't in retaliation. So these are called reciprocal tariffs. And what Trump is trying to do is to force the hand. You do it to us, we're going to do it to you, that kind of thing, in hopes that those other foreign countries will drop their tariffs. So it's a business tactic, and it's a smart business, just rocking the markets. China urges U.S. to cancel reciprocal tariffs, vows countermeasures. You know, China don't play, Ryan. They'll fight, and they're going to fight.
Absolutely. Do you think
so? This is
just reading. Guy said it in chat. It liberated day. It liberated my money from me. Do you think this is going to be like short-term pain for long-term gain, or is this just like, are we just kind of pissing in the wind here?
Yeah, I think partly the latter. I think this is like an overreaction, And I was watching. Who was it last night on the CNBC, and they were talking about the VIX, which we'll look at here in a minute. And the VIX is predicting volatility for today and tomorrow, but next week it cools off. So this VIX instrument is predicting that the bottom will come in, and then we'll get a bounce. But I'd say today and tomorrow, until the fervor Chicken Little market mentality wears off, we could see further downside, So you gotta be ready. And we manage these opportunities. We manage trading. Number one in trading is to make sure that you're not risking any more than 2 to 3% of your portfolio in any given trade. So if you've done that, at least every individual trade, you won't lose too much. And then, secondly, it's and probably the most important mantra is manage risk and let the winners take care of themselves. If your portfolio is being liberated of its money, then today your job is to manage risk. Stop the bleeding. Remember, you can lose more. Forget about getting your money back. Just cut the losses. Cut the losses. Cut the losses. That's the game that we want to play today, and let's play it. Let's go right into our portfolio. Hey, Ryan, before I put this first trade up, can we take a look at the portfolio?
Absolutely, we can.
Well, thank you. So this is where we are right now. We had one more winning trade last week. We'll look at both of them in a minute. We got one trade on Nike that's in trouble. So up to this point, we're at a 90% win rate, 91% wins. We had 60 out of 66 winners and 6 losers. That's just it's phenomenal, yes, and it's part of the system. This is the run rate, typically 10%, 90% win rate in 7 days, and we're beating we're slightly higher gain, and our run rate is only our days in the trade is only 5 versus the 7 on average. So we're going to take a little bit of a hit here on Nike. Let's go right into Nike, and I'm going to use something called Tom's Tools or risk graph to help us navigate the P&L in the position. I'm having trouble with my voice this morning, man. Let's go take a look at. Oh, you know what, Ryan? I'm off script. I want to talk about the markets first. Let's go into the markets. Totally got off track there, but we'll come back to the Nike trade here in just a minute. Let's take a look at the markets, y'all, because it is a veritable bloodbath. Here is the SPYs last night, and the futures show the SPYs down to 543. Let me show you in colors. Look, with 9 minutes to go before the market opens, 60%, S&P down 3.64%, NASDAQ down 4%. Massive one-day correction. The question is it going to keep dropping or bounce today? I'd say not up, certainly. We might get a bit of a bounce, but I'm not sure at this point. We have to wait and see. So let's take a look at the SPYs here. So the SPYs are due to open up at 543. Let's put a little line there. That's about where we're going to open. I'm in the Hub software, by the way, and the Hub software gives you the opening prices here. Those aren't live yet. They'll be live. That's currently the pre-market price of the S&P 500. All right, so we closed there yesterday. We're right about down here today. All right, now one thing I really like to do in these kind of markets is just sell credit spreads on the indices. So the SPY's down to 543. You know, if you can sell a credit spread at ideally above the 200, but selling a call spread at 570, maybe 565, those would be decent credit spreads on the SPYs. You can take a look at and we can look at some of these later maybe. Let's take a look at the Qs here. And the Qs, similar story. The Qs due to open up at 455, which is right down here. So there's 455 there. Okay, so those are the things you can do with the market indices in a correcting market like this, with a big reason for the markets to correct. By the way, we didn't mention that, Ryan. Higher tariffs across the world, and big higher tariffs equals higher costs for us as consumers, equals less revenue for companies, equals declining earnings. It's and possibly inflation. If it gets really bad, then recession. All right, that's a really dark picture of the horizon, but it is possible. One thing to note about this tariff war is that Trump doesn't necessarily want to keep those tariffs in place. If the countries relax their tariffs, then so will Trump. So it's a tactic that hopefully will work. But if this thing escalates, and it probably will for a little while, expect further downside. All right, let's take a look at this thing called the VIX. What's the VIX? It's the implied volatility of the S&P 500. It's called the VIX, and I don't have the current VIX future prices here. Let me go somewhere else, and we'll look there at the VIX. The VIX is going to open. Actually, I've got VIX futures here that are good too. VIX futures give us a good idea of where the VIX is going to open. And let me see if I can find it here. There it is. Let me put it up here. I don't see it. VIX futures are at 24.20. Okay, back to the hub chart. That is a little bit right about here. So what's really strange is the VIX isn't as high as I would expect. Normally, you'll see the VIX, back up above 30 on such a dramatic move down. So the volatility is coming in essentially, we read this as the average expense of options. So if the market is tanking, then options get more expensive, and that gets reflected in this chart. That's in essence what it is. You can look at it in a couple of other different ways. All right, I'm rushing a little bit because I want to talk about Nike first. Nike, as I said before, is going to open up below our short strike at 62. Okay, this was an AI trade. The AI signal told us that Nike should not drop. I'm going to get to the chart here. Nike should not drop below 62. Well, it did. It did. It's at 55, 56. So Nike's going to open up down here, off the charts really, but below our 62 level. And that puts us, puts us down here. Okay, so this trade is going to take a big hit. Now, listen, if you get out of this trade in the first part of the morning, you'll get you'll pay less to buy this back. Now, the max value of this spread is 1. So do not buy this spread back for 1. Only buy it back if you can buy it back for maybe 90. The reason for that is if you buy the spread back for the width between the strikes, that is max risk, and you're going to get that anyway at expiration. So simply said, buy the spread back for less than $1, less than $1, preferably 80 cents, 90 cents. You might put a line in the water for 80 cents this morning and pull it off before all this IV drops out and you lose less. You have to buy it back for more. So as time passes this morning, you will end up having to pay more and more and more for the spread. All right. Don't buy it back for $1. That is what you'll get anyway at expiration. Really important. Buy it back for less than $1. I've said that 4 times, Ryan, because I want to be really emphatic about that. Now, we did actually take off the other trade we had on, which was XBI Pharmaceuticals. We placed this, let's see, on the 27th, and by the following Friday, we took it off, not a few day trade. And what happened with XBI is one of the FDA officials resigned because of our RFK and his policies on healthcare and pharmaceuticals, and a massive tank job. Big opportunity still on biotech. All right. Market opens in 2 minutes, Ryan. Let's take a look at one of our trades of the day. Before we do it, though, would you mind popping up that graphic of the tariff structures that Trump had in his Rose Garden announcement for Liberation Day yesterday? Yeah, you can see the magnitude of these tariffs. So on one column there, it shows the tariffs that China, Vietnam, various others, they're charging us. And then what Trump has done is met them halfway. And take a look at Vietnam. 46% tariffs levied against Vietnam. Now, that's important. Taiwan as well. I couldn't read this chart before. I mean, some of these tariffs are just gargantuan. Vietnam took it on the chin in a big, big way, 46%. Now, is that important? Well, it's important for Lululemon. Let's take a look at Lululemon. This is our opportunity for today. Shares tumbled more than 12% on heels of President Donald Trump's new wide-ranging tariffs. The company's now, according to the SEC filing, 40% of its products come from Vietnam, which was slammed with a 46% tariff. And taking a look at the Lululemon chart, obviously that's going to make their costs more, or their products are going to cost more now. People are going to buy less of the products. It's going to impact their revenue. They're kind of in trouble, right? We're going to open at 243, right there. There it is. That's a massive drop. That's a 38% drop in the stock from yesterday. All right. Now, right now, the implied volatility of the options is probably good to give it some room to maybe bounce. Is that way overdone? Probably. Because of IV, the expense of the options is higher right now because it's chicken little market. The sky is falling. Option traders are going nuts. And we can now get more premium, more credit for a credit spread, meaning we can place the credit spread further away. So the first place I'm going to look to draw the line in the sand is right here at 300. All right, let's because we're already starting to bounce a little bit here. We got to be careful. Also in the wings, sir, the countries start to I see it's coming up here. If the receiving countries start to lower their tariffs, our tariff structures could change. That is always sitting in the background, especially. I'm seeing lemon recover a little bit here. No lower. I'd say the top, let's say 275. That would be too close for me. I think 300 is as close as I want to go. The big question, of course, is can we get any credit there at 300? So I'm going to go into a live simulated thinkorswim environment, and I'm going to go to follow the formula, 14-day trade. All right, these are the April 17s, and then I go take a look and see what's available at 300. All right, there's so much slippage right now. Well, mid price shows $1 on a 300 spread. Let's go up a little bit higher. Yeah, see that? Well, it's all of it. And that's actually a negative. No, it's $1. $1 mid price. We're not going to see valid prices here because of slippage. Here at 302.50 shows a 17-cent credit. So this is a bit like a feeding frenzy. And what I'm going to do here is throw a hook in the water at 300. You know, in my brain, here's my brain's visualizing, a school of fish just in a feeding frenzy. And I've heard, although I haven't done this, you can drop a hook in the water with no bait and snag fish when you have this kind of a market. So let's try it at 300. These are 2.5-point spreads. This is a 2.5-point spread, and it shows 99-cent debit, but we're still going to ask for a minimum credit. This is a lot less than the mid price. The mid price, incidentally, is showing a debit because the bid price is $2.55 debit, and the ask is 70. So halfway between there is the 93-cent debit. So it's not real. I'm going to put this in. We're going to see the actual price that the market makers are willing to offer. Let's do a confirm and send. And let's go back to monitor, and let's wait for them to bring that price into something more reasonable. You don't ever want to sell a credit spread for a debit. They'll let you do it, by the way. Be careful. Make sure you don't see a minus sign when you place the order. Please. It's really important. All right, so we're going to let that one sit for a little bit, Ryan. And now, because I know we have traders from my community here in Snipers, we're going to open the floor for any potential trades that you may have in mind.
Sure. Yeah. There are a couple in chat, and just so you know, your connection is a little iffy right now. Not much we can do about it. I have it turned all the way down. But just so you know, if I ask you to repeat something, just know that it just kind of dropped for a second.
Costa Rica internet, man.
Do what?
Costa Rica internet.
Yeah, I figured it was like rainy season or something like that. I don't know.
Yeah, like that.
Just a reading guy said he said Nike, but we've talked about that. SHOO.
Shoe. Stephen Madden. These are shoes. I actually like Steve Madden shoes. I have some. And they've come down hard. I'm going to check the news on here on shoe. I'm going to go to finance. Let's go to finance, yahoo.com. Let's go check out shoe Steve Madden and see, a lot of these clothing retailers manufacture in some of these foreign countries. And I'm just seeing here, Nike uninvestable. Okay. Okay, so that was a few days ago. They've come out. I don't see. Let's take a look here. I think there's probably better opportunities than this, and I'll show you a couple here in a minute. But if you do like this one, it's not. It's the thing that is striking me is that we have a mantra in my snipers community called "Look Left," and you look left, you don't see much, but if you look left right here, short-term left, you can see that we have strong support at 25. So the stock, despite this news, this tariff news, has come to rest around 25. So I that's why I don't like it. I think there's other ones you could consider, and I'll show you a place to find some. And here's just some of the biggest movers in the stock market today. Lululemon, Nike is one we're in. We'll take a look at that one here in a minute. Discount retailers, Dollar Tree and Five Below. We can take a look at some of those. Dollar Tree. Let's see here. There's Dollar Tree. Now I like this one because we might be able to get up here at 80. So if you like this setup, and I do, because the stock is below the 200-day average, well below. It's now below 70. We could sit here all day, Ryan, because there's a boatload of these out there. Look at that. Now we're below 70. 80 up here would be a really good, relatively safe place to trade, because this stock not the 200-day average, the blue line here, in a long time. So that's more likely to hold the stock than not, and then we'll sell on the other side. So I like that one at 80. Now don't do this one, and you don't want to do more than one, maybe two retailers, clothing retailers. That is, if the whole sector bounces, imagine this: Trump cuts the tariffs. So be careful over too mass sector, because if you lose on one, you'll probably lose on the other. And notice I didn't say if you win on one, you'll probably win on the other. That's true. But more importantly, managing risk first is if I put two trades on two clothing retailers and I lose on one, I'll probably lose on the other. That's more important than winning on both. Losing on both is more important than winning on both. Manage your risk and let the winners take care of themselves. Flat. You gotta get there. You'll have a flip. Well, that'll start being where you look. All right, let's look somewhere else though. So there's a lot of retailers that are good opportunities. Now I do know this one, Restoration Hardware, announced earnings yesterday, and they plunged already. So let's take a look at Restoration Hardware. And Ryan, if there's any more, just let me know, and I'll stop throwing out potential trades here.
Yeah, Tony's got one, but go ahead and finish up with this one, and then we can end on Tony's.
San Diego, Tony's in the house. Hey, Tony. He's one of the best snipers we have in our community. Yeah, so this one had bad earnings yesterday, and even more bad news today. The stock's all the way down to 156, 157. I like it at 250. but I don't know you get enough credit. I would say looking left, the closest that you'd want to go is looking left. Boom, boom. 215. That's close I want to get, but I would rather get in at 250. Give it some room to return back from whence it came. I'd say 250 would be the best spot. And then you might even be able to, if you don't get any credit, just drop it down to the next level, that level there. And there's almost always going to be right at a round number. So 230, but no lower than 225 on this one. All right, let's take a look at any others, Ryan?
Yeah, Tony said LW.
Okay, let's put that one up here.
He said looking at LW 47.5/45p for 25 cents.
Yeah. So some stocks go up in this market, right? And so this one is up when the others are down. And so I want to know why. I've not traded Lamb Weston. What's the symbol again? LW. Let's take a look and see what this company does. Tony, if you have any more information about why this stock's up when the whole market's down, let me know. That's what I'm trying to figure out. So just right off the bat, generally, I'm not too interested in putting a bullish trade when the markets are down 4 or 5%. Really a good idea, unless you have a very good reason to believe that this. And okay. However, if I was wanted to put on a bullish trade, I would look at sectors that are rising, or even, and I'll give you one here. Guess what? Gold is rising. I bet it's up today. Here's gold. Gold is not dropped. It did drop a little bit today, but gold is in a solid bullish prognosis. The stock's down a little bit, and we've got strong support at various levels, 270. So that one's going up. The other sector that's at least was going up yesterday, let's see, is utilities. These are completely domestic companies, and utilities are up today. Why are utilities up? People are always going to pay their electricity bill. They're not so connected with world commerce. They're local companies that are pumping out electricity and other utilities. So this one looks really nice for potential bullish trade. The only thing that gives me hesitation is this resistance level. There's no blue sky above these points here. So I would look for a close above this level at 80, close above 80, and consider a bullish trade on XLU. Sell underneath somewhere, maybe sell at 75, or 70, somewhere in here, 77.50, 78. I would go up to 78, but no higher, once the stock actually closes above 80. So there's
So Tony did say that that LW beat EA and raised guidance.
Okay, yeah, they beat and raised. They announced earnings, beat and raised. I don't know that this is immune. The market continues tracking down. I'm just not interested in bullish trades on many stocks right now. But if you're convicted on it and you feel good about the trade, then you know what to do here. I would say no closer than 55 on this. But be careful with bullish trades. Why go against the grain? Go out in bearish stocks, and there's lots right now. A lot of retailers, of course. Bank stocks retreated sharply on Thursday, weighed the economic fallout of Trump's tariff policy. Shares of JP Morgan Chase were down, while Citi, Goldman Sachs. So the financial companies are down big today because of the economic fallout. Make no mistake, if the prices of world goods rises, that chokes the world economy, not just the U.S. economy, and that has a really negative impact on banks. So let's take a quick look. I'm going to give you one ETF to track banks, XLS. That's an ETF that tracks the financial sector. Take a look at JP Morgan and Chase, or JP Morgan and some of the others. That is Chase. Let's take a look. Yeah. JP Morgan, Morgan Stanley, Bank of America would be places to look. This is like going to another sector that's under duress, and there's Morgan Stanley. Sell up here at 120 on Morgan Stanley. JP Morgan, look at Bank of America, Wells Fargo, BAC. Look at banks. There's lots and lots of bearishness across the board. And one place you can go to get a feel for where the biggest train wrecks are is a free website called FinViz. If you go to Maps, so finviz.com, Maps, and then you can see one-day performance on the S&P 500, and it's a veritable bloodbath. Notice, so beverage companies are up, utilities are up. Just looking, tobacco is up. Drugs, pharmaceuticals are up a little bit, maybe a bounce from the recent. So there is some bull, and I'm going to leave you with. Actually, I got to take care of the Nike trade here just a sec. But what's really interesting about bearish markets is that there are sectors like alcohol. I haven't seen Bud this morning, but Budweiser isn't taking it on the chin. Bud's up today. Guess what? So is STZ, I bet. Constellation Brands. Corona. They make Corona. Let's take a look at two booze companies not dropping. Alcohol companies are called sin stocks. Also, we have tobacco. Philip Morris.
Wonder if that would include like gambling stuff too.
It does. It really does. Look at Philip Morris. And we can put up some gambling companies. They typically go up. Booze, cigarettes, stocks. Think about it. If you're getting hammered in your portfolio, you're losing money. You're going to get a cigarette if you smoke. You're going to drink some beer if you drink. You might even go gamble to try to get some of your money back. So those sectors, XLU, utilities, tobacco, alcohol stocks are good places to look for bullish candidates. All right, one last thing. Man, we could do an 8-hour webinar today because there's so much out there to trade. We love bearish markets. Let's take this last night. And I'm just going to check to see how much it would cost us to buy this spread back. These prices are delayed. We know that the stock, let's take a quick look at Nike on a stock chart here. Nike is down. Let's see if it's balanced. I'll go to the right place here. Give me 1 sec. Let's go back to the sniper candidates. Let's find Nike. There it is. So it's bounced a little bit. The stock's at 57.45. Okay, on this risk graph, that's right down here. Okay, so we should be losing on this one about $341 on a $500 trade or $450 trade. So let's see if we want to buy this back. Let's see here. I'm going to go ahead and so here's the order to buy it back. All right. So we originally that's to open it. We sold originally the 62 and the 6 and bought the 61 underneath April 11th in NKE. Now to close the trade, you simply flip the buys and the sells. And I'm seeing here that we could buy back the 62 put and sell the 61 put that we own, and it's showing a 20-cent credit, which is not real. But basically this value will go up to close to $1 later in the day. So what we can do here is try to get out, or is the amount. I'm going to just 50 cents. So they want $1. Here we go. Here's what I was saying before. Yes, they'll let you buy this back for $1. If you did that, then look here, you would be at max risk. Okay? So if you buy the spread back for its spread width, its max value, you're at 435 loss on this trade. So anything less than $1 is what you're saving to close the trade down. And I'm seeing 85 cents here. Let's try for 75 cents. So this is how I would get out of this thing. Is start generous for yourself. Mid price is about 85 cents. Start out to 78. Let's try for 75. Good till cancel. It's at 70. It's dancing around. So we're trying to catch the fish with a hook in the water. Let's lift it up. I just got it. I just got it for 70 cents. Now, that's simulated. You may not get that level of a price, but that's the game. So you want to don't go anywhere near $1. Maybe 90 cents max to buy the spread back, and that will save you 10 cents of loss per contract. So I'm going to track this at 70 cents. Try for 70. Try for, since I got 70, try for 50. Try for 60. Go up 5 cents at a time. That gives you a guide. And believe me, as we approach the rest of the week, tomorrow and then Saturday, Sunday, then what will happen is that instead of losing 20 cents or 30 cents in our case, you'll lose a lot more. All right. So what this order just did is I bought it back for 70 when the max value of the spread is $1. And that saves me $30 of loss. Okay, so that's the way to play this, and you want to do it early. Later in the day, you'll have to pay more. Ryan, there's a lot of material here today. But,
yeah, no kidding. Lots going on.
Yeah, lots going on. Like shooting fish in a barrel a little bit. So the action plan for today, and I have a similar trade that's in probably hot water. Haven't had a chance to check my trades yet this morning. But the game today is manage your risk first. And then once you're done, forget about making money on those trades. Just get out of them, lose as less as possible, and then go after another one. And keep going. If you're feeling emotion, feel it, yell, scream, get it out, and then put your attention on the rules that we use here and go find some bearish opportunities. Actually, I'm going to leave you with one more thing to consider for today, and that is on the indices. I mentioned this earlier. Let's go to the market review, and let's go to the SPYs. The Qs are really down hard. I like the Qs up here at 490, lying in the sand at 490. Ideally, the 200-day average, which is right around 495. If you can get something at 495, that would be a good place. We can look at the diamonds. This is the Dow. Same story. I mean, I am finding it interesting, Ryan, that we're right at this prior pivot. So there's some support there, and maybe that support level holds. All right. And then we have the IWM, which is the Russell 2000. And I like this one right up here at 210. See that pivot, 210, round number. Sell the credits there. That's always the question. Maybe drop it to the top of this bar, this pivot here, which is 209. So 209, 210, you can get 10% credit on your spread width. that would be an interesting trade as well. Hey, Ryan, anything else?
No, nothing in the chat. Tony says STZ trade just filled. But outside of that, nothing.
All right. Well, I know you know this, Ryan. It's tournament finals weekend.
Oh, yeah.
And I've got one on Saturday and on Monday for the national championship. Go, dude. Who do you have, man?
Do what now?
Who do you have?
I think I just don't see anybody that can beat Duke right now. They're playing such a high level basketball. They're destroying all the teams that they're playing, and nobody's stopping flag. So I just don't think I just don't see anybody beating them.
Yeah, I don't either. I went to high school in Durham long time ago. And I've always been a dose. All right, everybody. Thank you. Rules, manage your risk, and keep swinging with the rules. We'll see you next week at the same time at 9:15 Thursday. Ryan and I will snipe away. Have a good weekend, everybody.